Good afternoon, everybody. How was the weekend? Let's do a quick update on some of these pairs. I'm going to start off without much ado on AUD JPY on a daily time frame. So you can see a downtrend, a pure downtrend. You see big impulse here. You see correction. You see another impulse. You see another correction. Now uh, we have gotten into the sell. We want to sell down this pair. And if you look at it from daily time frame, you see the sell is due. There are things you should know. There are structure you should pay attention to in the market. When you see a structure that look like this, when you see an impulse, you now see the market making higher high, higher low, higher high, higher low, higher high, higher low. This way, just know that at a point, this structure is going to break down to the downside. All right, it's going to break down to the downside. Behave exactly like a diagonal. All right, you remember the diagonal looks like this. All right, diagonal looks like this. Okay, five-wave structure 1, 2, 3, 4, 5. After this fifth wave, which by rule or by guideline is permitted to overshot the trend line. Okay, from here you can have a breakdown to the downside. 1, 2, 3, 4, 5. This is the same way that this rising wedge also behave. All right, it eventually fall to the downside. That's what we are looking at now. If you if we take it to 4 hours, look at 4 hours time frame, you can see that it failed to break this top. When it fails to break this top, we know the selling is due. And I want to also see this pattern here as a potential head and shoulder pattern. All right, potential head and shoulder pattern. This pattern here, I want to view it as head and shoulder pattern. That's why comfortably I am on the sell and I give the sell out. And let's see how it goes. When it moves down a little, break even. All right, and allow it to move to the downside. All right. NZD. All right. You can see market moves in impulse and correction every time. Impulse, correction, impulse, correction. That's how market moves. In the downtrend, you see impulse here, you see correction here, you look for the breakdown, continuation. After continuation, you see another correction, you look for the breakdown, continuation. That's how market moves. See impulse, you see correction, breakdown, continuation. All right, you see correction, breakdown, continuation. You see correction, all right, breakdown, continuation. That's how market moves, guys. So now I have my order here, set stop here, because I know even if this market gets to this area, it must break down for continuation. So I have my set stop here, okay, securely up below this correction. See, this correction it can take a long time. If it's going up too much, I will remove the order, all right, and see where the correction will stop. Okay, so if you give me impulse here, I look for correction here and now enter or sell. Stop loss above here so that the risk will be very minimal. That's the essence of doing it like that. Okay, so we are watching to see whether at this level, this correction three-way structure here will be okay to break down. If it break down, it take me out, it take me in from here and it flush it down. But if this correction is not big enough, then it then means it has to move to the upside first. Then if you give me reversal impulse here, we look for correction here and what? And sell to the downside. That is Euro NZD. We have NZD update on NZD card. Good. This is going to hit my set stop. I have a set stop order here. Guys, look at this structure. This is a very simple structure, not hard to understand at all. I told you this is a clear pattern that a diagonal carries, okay? I told you when you have a diagonal like this, it will certainly break down. So you have the breakdown and you have the correction. After the correction, what are you expecting? You expect a breakdown to the downside. For NZD card, you expect this to break to the downside. So I have my set stop order at 0.8590. 0.8590 set stop. You can write it down or you can input it right away. 0.8590 is my set stop for NZD card. NZD card. All right. I'm risking no more than 20 pips. 20 pips, because once it breaks to the downside, it's not certain that it will go back to the consolidation zone. It must proceed to the downside because you have impulse, you have correction, you have continuation. And if you look at this impulse, this correction is already commensurate with this level of impulse. That's why I'm confident that it shouldn't give us another upside before it flows to the downside. That is NZD card. Set stop 0.8590. Set stop 0.8590. 20 or 30 stop loss. 20 or 30 pips stop loss. 20 or 30 pips stop loss. Okay, and then TP is a long-term market, all right, trade. You can target your TP at 0.8250. 0.8250. 0.8250. Right. So let's go card JPY. Card JPY. Good. All right. You can see card JPY. You can see the way it's behaving. Same pattern I told you is what you find almost everywhere. All right. You can make your trading decision based on this pattern. All right. Let's go to 1 hour to see how we want to pick our entry. Now, if you are not on card JPY, you can put your set stop. You can see it's breaking out of this channel already. You can put your set stop at 8415. Set stop order on card JPY 8415. Set stop order 8415 on card JPY. All right, because that's broken out of this channel and is consolidating. And the consequence of this consolidation is a break to the downside. Okay, it's a break to the downside. That's card JPY. Then you have Euro card. Euro card on 1 hour. The trade has done last week. We enjoyed this ride. This move to the downside. It has consolidated. Okay. Want to see how this pattern is going to behave here. Two things is likely here. I will be happier if this market can consolidate to the upside, can give all this structure, this pattern here, all right, back to this area. That would be a very nice setup. Okay, we'll now take this as a drop. Take this as a drop, and then from here, we put our set stop order here. From here, we move to the downside for Euro card. All right, move to the downside for Euro card. Okay, now let's look at the USD card. USD card. Let's look at USD card on a daily. On a daily. On a daily, you see the structure. See the structure that is given. So you see, I will not go into full details of how this analysis come about. All right, but from here we are going to proceed to the offside, because you see impulse, you see correction, you see another impulse here, you see this correction, three wave drop down. Okay, so if you have to analyze it critically, you will see that here you have a move. All right, so and then you have uh you have uh here it's a drop, then you have a running flat at the middle, you have this drop. This is a three wave pullback. This is A, this is B, then you must have your C to at least break this area. All right, then from here you now come down. Can you see now? So this is the structure we are looking at in USD CAD. But for now, where are we? Where are we? So if you drop it to 4 hours, you now see what we are talking about. Already you see on 4 hours, we already have a reversal impulse. All right, you already have impulse and you are having a corrective structure developing at the middle here. So whatever happens at the middle here is none of our business. Let it correct. Okay, at the point that this breaks out with a candle that close or that closes above this upper trend line, all right, we can get in for a buy and ride it to the top for USD CAD. So for now, it's still, to me, it's still premature because I see this corrective structure as too small. Let it build up, let it gather enough data. Okay, when it break out to the upside, put your stop loss below the flag, 10 pips below the flag, and buy. Target the previous high. Okay, and anticipate that there will be a breakout of this trend line. If it begin to correct here, then we know that it will break out to the upside. That is USD, USD, GBP, JPY, GBP, JPY. Let's look at. Okay, this is a very, very interesting pair because we there are things that we learn that we're supposed to start implementing. All right, when you see impulse down like this, and you see correction like this, you see another one like this, you see another one like this. What does it tell you? This is a complete corrective structure that we call a running flat. Okay, because this area has broken this top, but this area did not break this bottom, so that makes it a running flat. And after that, you saw a drop. Okay, that drop is a reversal impulse. So after that, you see a small correction, then set stop for downside. So this down here, this downward movement here, you should see the same measure of drop here. So this become A, B, and C. All right. Supposing you have three wave structure here, then and you have three wave structure here, then you should expect three wave structure. It become W, X, and Y. All right. But in this scenario, we do not have a three wave structure here. It's an impulse, clear impulse. Then this is a three wave structure, and then clear impulse. This is 5-3-5 structure. Okay, and a 5-3-5 structure cannot be said to be WXY. WXY is 3-3-3 structure. All right. So you expect this to drop. Let it gather enough data here to drop to the downside. Okay. So as it is now, you can just still leave it, let it develop. Okay, put it below the trend line there. Just put your set stop there and expect that it will definitely drop. Once it drop, it will pick you up. All right, it will pick you up and you follow up with the trade. Okay, that is a GBP JPY. All right, let's look at gold. All right, good. On 4 hours, you can see the structure that is developing. Okay, we put the pending order here, and I think the pending order was activated. Okay, was activated. market surge. Okay, activated and pull back to the zone. That's the disadvantage of pending order anyway, but it doesn't matter. Okay, we expect this to break down to the downside. Expect this to break down to the downside. Look at it, because already you have the three-wave pullback here. Let's try and analyze the market. After this movement down, you have 1, 2, 3, three-wave pullback. 1, 2, 3, three-wave in the middle. Then you have 1, 2, and 3. This is the what? W, X, and Y. So anytime this one break down here, all right, do not hesitate, because this is a clear running flat. You sell this one to the downside. Okay, so you can put, how you can approach the entry is by putting a set stop order here. Put a set stop order here. Do not jump in and just buy here. It was this candle that activated our order. All right, order looked too close to the market, and this when this candle, when market open, New York session opened by 2, it activated our order. It's making us to have some liquid drawdown, but it doesn't matter. Put a set stop here, and when the market drop down, let it go with your order. The target, you must break this low. Okay, you must have to break this low. All right, that is uh, uh, that is good. Okay, now the next thing we like to look at is check USD card. Let's check NZD. Check NZD card. Check NZD card. NZD card. NZD card. Okay, so like we check NZD card. All right. What we expect to happen here is a break here. If this market proceeds to the upside, may not have anything to do with it. We want to break and activate our sell stop here. Pull us along while going to the upside, right? To the downside, brother. Then GBP AUD. This markup was sent uh, late yesterday. Okay, I sent this markup. This GBP AUD is going to proceed to the upside, because what did I see after this drop? Okay, you have an impulse, you have correction, an impulse, you have correction, then you must see another impulse. Okay, to the upside. Expect it to hit this area to make another touch here. So if you can give us another touch here, then we look for reversal impulse there and sell it to the downside, because already you have this structure, very simple structure. Already this drop is being corrected here. Okay, so if you can have this level of this size of correction here, this will be a comfortable place to have a reversal impulse correction and join the trade for the downside. Okay, to target to break this low, come to the downside. All right, that is GBP AUD. So if you are not in the buy, do not worry. There's nothing to worry about. See this is a corrective structure, a larger corrective structure that is developing. It should come to this zone. All right, so this is a comfortable place where you see the first touch, the second touch, third touch. All right, third touch. So when we have the third touch here, then comfortably you can look for a big impulse, look for correction, and put your set stop here to ride it to the downside. Okay, that is GBP AUD. Let's look at GBP NZD. GBP NZD. NZD is also doing the same thing. I gave this markup yesterday. You saw this drop. after this drop in the market, after this drop in the market, see this drop, all this you see, they are just correction. They are nothing but correction taking place in the market. Then, my expectation, this arrow, my expectation is that this correction break to the upside. This is called A wave, B wave, and C wave in the making. C wave will come to this area. But at times, the market can just decide to say, oh, this is the only correction ending here, then the next move to the downside. That's why I give you this mark up here, that if it drops to the downside, put a set stop limit, a set stop order, so that you go with it. But I was so certain, so sure that this market will have to move to the upside and complete this structure. Okay, complete this three-wave pattern this way. Complete this three-wave pattern. All right, move here. When it gets here, we now look for a sell uh, order, a sell setup where we put sell stop here. As it's going down, let it pick you up. All right, and move to the downside. So this one will now be impulse. 1, 2, 3, three-wave corrective structure, and then what? Boom, to the downside. That is GBP NZD, GBP NZD, GBP NZD. Let's look at USD ZAR. USD ZAR. That's one exotic pair. USD ZAR. USD ZAR. USD ZAR is looking very interesting. Let it look. USD ZAR is looking very, very interesting. Okay. So now what you do, you should know that when you have all this drop, all this you see here, the correction to the drop. So the simple thing to get a setup here is by drawing your counter trend line like this. Okay, draw your counter trend line like this, and what you'll be looking for is a break of this counter trend line. So already here you have your move to the downside, you have correction, and then what are you looking for? You are looking for a continuation of this trade. You are looking for this continuation to complete the structure. But how do you get in? As it is now, it's still in a bullish state, okay? Because you have impulse, you have impulse, and you have correction. Let me show you. You have impulse, you have impulse, you have correction, you have move. It moves. It corrected, it break out, it moves. So we don't know if it will correct and what? And break out again. We don't know. So the only way that will make us to be able to get in without getting it at the wrong time is if and only if we can exercise patience and allow this market to break this trend line to the downside, counter trend line rather, to the downside. If you break it to the downside, then we know that a downward momentum, all right, is available. Okay, once we know that a downward momentum is available, then we wait for correction at this stage and put our sell stop here. Sell stop. All right, do not sell within the consolidation area because you don't know if the market will still pull to the upside or will give you a larger corrective structure. That's why it's advisable that you put your sell stop order here so that come here to pick you along with the trade and move to the downside. All right, that is USD ZAR. USD ZAR. All right, then let's look at USD JPY. All right, USD JPY. Let's look at USD JPY. Come. USD JPY. Okay. Sell is overdue. Time frame. Let's see. Okay. our stochastic as we set to the top, okay, and then you have our RSI is at 54. So you just need a little patience for it to drop, okay, because our RSI is still above 50. What does it imply? If it's above 50, that although correction is over, but momentum to the downside is not available yet. All right, momentum to the downside is not available yet. So we've got to be patient to see that this market breaks to the downside. Okay, and how do we know that it's going to break to the downside? When this RSI goes below 50, we know that momentum to the downside is available. But certainly at this level, it's not a buy market. It's not a buy market. At this level, we need the market to break down. Let's check smaller time frame, like 15 minutes, to see what is happening. All right. Let's see what is happening in 15 minutes. Okay. All right. So what we can do here is by securing this counter trend line, let's secure it. Okay. Let's secure it this way. So what are we looking for? We are looking for a break. You can put your sell order here, set stop here. You can put it at 110.05. No, 110.10. 110.10. So if you continue to go up, it will not activate your sell order. All right. But if the momentum for the downside is available and it drop down, it will activate the sell order, and that will be the beginning of a downward movement of USD JPY. Okay, that will be the beginning of a downward movement of USD JPY. But certainly nobody should to buy USD JPY at this level. It's already too expensive. At least it must drop down to this level before we can consider a buy opportunity. It must drop down to at least this level. Okay, and give us this level, then we look for buy opportunity for the upside. Because if you look at USD JPY in a weekly time frame, you will see that it's not a bearish market at all. It is a bullish market. Okay, it's a bullish market. How do I mean by it's a bullish market? Here you have impulse, you have impulse, you have this move, you have another impulse, you have another impulse. So, but here you are seeing correction. So what does it mean? You are going to have a break to the upside to complete this three wave move, A, B, C here. So what of this one in blue? It has to come down to complete it. So this will be a bigger A, a bigger B, a bigger C. After that, then this one in white here will now complete the structure here to the upside. Can you see? Okay, let me use yellow to demarcate the structure for you. See this one? See this one here? Okay, let me now use blue or this color. You see this one here? That is this one here. Okay, and that complete the structure here in the middle. So can you see? See A, you see B, and then you see C again. Okay, you see the small a, small b, small c. You see this structure? That is a zigzag, a flat inside zigzag corrective structure. Yellow is A, yellow is C, and you have this color in the middle is the corrective structure. So you can see, very simple. So I've done a focus for a 1 year, almost a 1 year focus for you on because this is a weekly time frame on USD JPY, and you can be following through. It's a simple structure. The template is there already. You see this drop here, you now have it here. Simple. A simple forecast. This become A again. This is simply a three-wave drop. See, this correction, boom. This is W, X, and what? And Y. That is it. Okay, so that is it. I'm going to upload this to YouTube and do subscribe to my channel so that you can receive free content from me, and also encourage me to upload more content for you. Remember to click notification bell so that whenever I upload any content, you'll get to see it. All right, trade with care, and bye for now. Bye.